All right, traders, before we enjoy the weekend, let's do a quick study session here. So the green streak lives on. Within Trader Society, we absolutely crushed it again. If you watched my video yesterday, we were interested in doing put options at 439.50 and 442. With that being said, we were not doing puts at those levels. I ended up doing my first trade on puts at 443 towards the exact top, and then I was hitting puts at 442.40 for a nice quick profit. Then I had a phenomenal trade on call options, and I led the overall direction on calls throughout the rest of the day. I'm going to show you on how we were able to absolutely crush it within Trader Society once again using the 30-minute trading strategy. We had 60 people go green, only 5 red. With that being said, man, people are getting results. Big shout out to Uncle within the chat. This guy's an absolute beast within the chat room, and he's going to be an upcoming moderator as well. He's been absolutely crushing it, man. So look, let's break it down and let's get into how predictable this market truly is. We're going to be recapping the trades in commentary. So in terms of SPY had a massive gap up today. With that being said, we were interested in doing put options at 2 potential levels if there is a strong bearish confirmation on the 30-minute, because, you know, if you're not using that 30-minute red bearish candlestick and you've been doing puts lately, you're getting absolutely wrecked on those lower time frames unless you're in super quick and out, but it's just not too ideal, right? So in terms of our levels, we were interested in puts at 439.50, but in terms of the pre-market, it remained green and super bullish, so there was no reason to short or no reason to do puts at that level. We were also interested in 442. This was a key resistance level right here that was never really tested in terms of previous support once it cracked. And then there was also some strong resistance at 444. Like I tell you guys all the time, you need to wait for a bearish 30-minute red to consider puts at major resistance. And surely enough, and this is where we started making money on the puts. And just full disclosure, in terms of market open, I did absolutely nothing. The reason why I did absolutely nothing, and I told people to do nothing, ideally for the first 30 minutes to 1 hour, is because the price was just so high in price to consider call options, even though it continued to go up. And there was no confirmation for puts, and it was too strong and bullish to even consider puts. So I told my team, I'm sitting on the sidelines. I'm not doing anything. We need to wait for some sort of pattern to develop. In terms of yesterday's pattern, which was the best trade on calls that we made yesterday, that took 2 hours to develop. If you watched yesterday's video, go back and watch yesterday's video because that was a phenomenal trading lesson. But anyways, that's why I was sitting on the sidelines for basically the first hour, because it was too high in price. You know, you need to give it some time to breathe and form some sort of pattern. You don't want to jump into puts right away because there's no confirmation on the 30-minute red. And if you're not using that 30-minute red confirmation and considering puts at key resistance, for first resistance levels that have been tested or major bull trap levels, you're getting absolutely wrecked if you're not using that confirmation. So with that being said, I sat on the sidelines, and then my first trade was puts. I did my puts at $443. Basically, once we formed this red bearish candlestick at a key resistance level, you can see right here your major bull trap level was 443.90. You also have a lot of resistance at 442. So in the middle of that, once I noticed that there was a red bearish 30-minute candlestick, that's when I was hitting puts into the spikes, and it was working very well. I did it 3 times on the spikes for quick profits. Ended up making it nearly $3,000 doing that. And then let me go over my call trade, right? So in terms of the put trade, we waited for a bearish 30-minute red candlestick at key resistance. See how here the SPY is going up on the 30-minute. Then when it hits the major resistance, 443.80, remember we were doing puts on this one as well, and we used the daily chart. First time it hits 444 was the previous support should react as a resistance initial level. We said it was likely going to drop. We banked on that. And then I did it today in terms of 443, sold quickly for profit, and then towards 442.40, I did it twice, made some quick profits, and then I sat on the sidelines and hit calls. Now let me go over the legendary trade for calls, man. Let me pull this up and explain to you this pattern, because this was the pattern that made people money. They did extremely well on this overall pattern. I'm gonna point out some call trades here. So the 12 p.m. pattern, this was the key one. You could see right here at 11:49 a.m. I said the 30-minute pattern is saying we can reverse for a bullish spike at 12 p.m. I'll be watching. We had plenty of people do calls on that. Unfortunately, it spiked too quickly a couple minutes before 12 p.m. and I missed out and I didn't want to chase it, but I was extremely bullish. And I told him, this is a call play. If you want to do calls, you do calls. I sat on the sidelines because I already had 3 winning trades. But in terms of the trades that I calls, let me quickly recap those for you. So what was I seeing in terms of overall bullish patterns on the SPY? let's kind of go over this. This was the main bullish pattern, and I want you to take a very close look at this to see how predictable this is. See how you have this bearish doji right here on the SPY. So you have a bearish doji, and then you have a, red like uptick kind of candle, right? So just compare this hour of comparison, right? Now I want to show you what SPY has been doing when it's been forming these bearish dojis. It has a bearish doji right here. It downtrends for 30 minutes, then it bottoms and it starts to go up overall. It has a bearish doji right here. It has a bearish candle after that. It bottoms, then it starts to go up. Do you see how these two candlesticks look very, very similar to these two candlesticks in a sense, right? And then you could just see how many times it would do that for a bullish reversal. And we discussed this, downtrending 30-minute back-to-back slanted sideways pattern where when it forms a bearish doji and then it sells off for another 30 minutes after that, it tends to reverse and go bullish. And we also mentioned in yesterday's videos, whenever SPY retests the lows of these bottom wicks, if you've been paying attention to the low retest on 30-minute bottom wicks for the first time, it tends to spike. And as you can see, if you look at the 30-minute chart, you had a very nice, strong, bullish wick right here. And the first time it retested, that was the bottom for calls. And you also had this pattern when SPY, forms the bearish doji, and then it goes down for 30 minutes, slanted sideways. It tends to go bullish and recover. And take a look at this. This is why I was extremely bullish at 12 p.m. as well. I'm going to quickly show you more examples of this pattern, playing out. And we discussed this very, very clearly in terms of visually yesterday, because this strategy, man, a lot of it mainly is just visuals. But I'm going to show you on how bullish SPY has overall went when it tends to form that pattern. Take a look right here. It does the same thing. It forms that kind of bearish doji, then it downtrends for another 30 minutes, and then it goes super bullish. Bearish doji, forms that 30-minute pin, and then it goes super bullish. Do you see how many times that has worked throughout the past 10 days on the 30-minute chart? And you combine that, right? What are you going to combine that with? Right here, the bullish bottom wick, first time it tests 442. We had Uncle With in the chat. He did the calls at 442.30. He got in after the spike a little bit and he held, sold into 443. He absolutely crushed it today. The guy is consistently making $4,000 to $5,000 plus a day now. It's absolutely unreal, man. He owns a McLaren as well. Big shout out to him, man, because his trades and everything he's been doing is on point, and he's a new recent member within the chat. We are definitely attracting competent people who understand how to trade the market and people who see the value in terms of what it is that we're doing with the trading strategies. So I do want to give a big shout out to him where credit is due. But yeah, that was the main overall killer trade idea on the day. There was one more nice opportunity for calls, and I did take advantage of that as well. But that was the main opportunity and the main sort of education that I wanted to cover within this video on the main trade idea. And then I told people from there, it's going bullish, history's repeating itself. So you can see right here, it has the bearish doji, and then it has the pin, right? And then it has the pin. It just goes super bullish. And I told them, this is going to continue to push higher for new highs, and it's going to continue to go up until it forms a 30-minute red. And you can see that's exactly what it did. Now, we don't know when the 30 minutes is going to go red, but if you're getting an amazing entry, and you're just scaling out and selling some of your size into rips, and then if you want, you can add back as it drops into the dips. You can add some size back, kind of scaling on dips, sell into rips. You can just continue to kind of hold that and let your runners run until the 30-minute right here. This is when the 30-minute went bearish and red. Once that happens, you just sell. You just sell and you take all your gains, right? But you can just keep on scaling out into these rips every single time it's ripping up. But the point I made was, and this is how we didn't get trapped in puts, we were doing puts when this 30-minute candlestick closed red. We were doing puts. And then we weren't doing puts down here because there was key support and we understood the bullish pattern for the 12 p.m. reversal, right? Which was right here. We understood that. And then we also understood, oh, wow, the pattern's working. It's flipping bullish just as we expected it to spike. And we understood this is going to continue to go up like it did right here with the same sort of pattern until it forms a red bearish 30-minute candlestick. And then surely enough, if you would have waited for the red bearish 30-minute candlestick, you would then know, okay, what's the best level for puts? towards the high of that 30-minute candlestick. And shortly enough, when it retests the high, that's when it finally sells off. So that's the game, man. And that's what I truly want you to understand. Utilizing the 30-minute chart is going to put you in the best trades possible. And you're not going to be getting trapped in puts, and you're not going to be getting trapped in calls if you understand how these patterns and how these trading strategies visually work. You can just see how many times that pattern formed today. Look at this. You have the bearish doji right here, and then you have the red pin, and then what does it do? It reverses 30 minutes. Compare this to that pattern that I just showed you. It's the same exact pattern. Literally the same exact thing has happened. And not only that, you combine it and you stack it with whatever you can. I think you could stack it to make it more bullish on is whenever SPY has been retesting key support for the first time on a bottom 30-minute wick like this, it tends to bottom and it tends to go bullish. Now I'm going to show you, this is a 1 minute and a 1 minute time frame example. What we're going to do is we're going to go to 12 p.m. So you should understand why we were bullish and expecting it to spike at 12 p.m. Now, if you wanted to confirm that more, if you want to give yourself more confidence to say scale into your position, what can you do? So in terms of best entry, this is one thing you could do. You can say that, okay, it's going to spike at 12 p.m., but let's say we want to get a better entry. Maybe we get in a couple minutes before 12 p.m. It's okay to get in a couple minutes before the 30-minute candlestick closes if the price is right. So what would be considered the right price? Well, there's a lot of support at 442. That was the bottom of the low of the 30-minute wick. So if you see it consolidating on the 1 minute chart and holding 442, then you're going to want to start buying those calls a couple minutes earlier. It's okay if the 30-minute candle hasn't closed yet. If you do it a couple minutes earlier before the close, as long as it's holding, it's having small bounces, it's forming support, then take your premature entries, which could end up being the best price possible. And then in terms of what would be your strong confirmation that it's actually going super bullish now. You can see right here, there's some resistance at 442.27. If the SPY breaks above that resistance level and then begins to form a floor at the previous resistance level, that means that the trend is now reversing bullish because it's no longer forming lower highs. It's breaking above resistance and it's forming higher support. So this is your resistance, this is your support. It bottomed at the key support level, which was the bottom of the 30 wick. If you see SPY breaking above the level, wait for it to pull back. Once you've identified that the low of that pullback is at the previous resistance, this red line, or slightly above the resistance, that's when you can confirm and say, okay, SPY is breaking above resistance. It's now forming a higher floor, higher support at previous resistance. This is confirming our theory that SPY is going to continue to run and continue to go bullish. When you see this happen right here, see how it bounces off the previous resistance instead of dropping back down to 442. This means that this breakout was a credible source, and it's likely not going to be a fake out because they're forming a higher floor at the previous resistance level instead of just faking it out and dropping it back down to the previous support at 442. That's the game, and that's what you need to visually see and understand, and that's your confirmation to either add calls or to get in calls if you didn't get in at 442. Now, the reason why I kind of swayed away from this, even though I was super bullish, first of all, I already had 4 trades on the day. I had a trade before this on calls. It was absolutely killer. I don't remember in terms of exactly what I saw in the 30-minute. I'm sure if I looked at my phone, I would remember it, but this looks completely different to me, and it wasn't 100% the best setup, but it worked perfectly. I had a trade before that on calls. It worked absolutely perfectly where we bottom ticked this, and it did very, very well. But like I said, I don't visually remember it looking at the charts. All these things happen in the spare of the moment, so I'm not going to remember everything. And this looks different to me because I don't trade on, I trade on my phone. But I try to share with you the most predictable ones and the ones that work best and the ones that are just very simple and easy to understand. And also understanding that SPY loves to go back to the high of these wicks. It loves to retest the high of this. It loves to retest the high of this. It loves to retest the high of these wicks. So it's likely going to bounce at the low of these wicks, right? But that's how you can kind of tell when the trend is shifting bullish on the 1 minute chart. But the reason why I didn't do that last trade on calls, even though I was super bullish, is because I already had 4 trades on the day and I was up nearly $4,000. And it's just having that understanding as well. I'm someone who really loves doing puts, and a bulk of my profits came from puts. Even in bullish markets, I do very, very well in puts because I understand how not to get trapped using 30-minute strategies. And I'm a scalper. I go in and out quickly. It wasn't too long ago where I would do extremely well scalping against the trend. And it works if you know how to do it. Do I think it's the best way to trade and the best trading strategy? No. And I think you're going to make a lot less money doing it as well. And your risk to reward ratio isn't going to be the best. But if it works for you, which it did for me, then all the power to you. I just think you should be optimizing for something better with a higher risk to reward ratio. And just having that understanding as well, since I have a following and a lot of people have smaller accounts, it's probably best to just lead the overall correct direction and put them in the most competent trades rather than putting them in trades that are against the trend where you just make a quick small win, but the risk to reward ratio isn't good. And as soon as you exit for a win, it just reverses instantly. And you could have done so much better on the other side. But hey, if you have a strategy that makes money, go for it. Just understand you should try to be optimizing for what's best for your situation and what you would like to see. And always try to be approving. Don't settle for something less, even if it's working. Do what's working for you, but find a way to do it better or find a strategy that's better. But stick to what's working, but always find ways to become more competent and to trade with the trends rather than against it. But the reason why I wasn't really doing calls is because it already bounced off 442 and I didn't want to chase. And then it's just having that discipline, man. I had 4 winning trades in a row. I wanted to call it. I had a great idea on calls, but I missed out on it because it just spiked so quickly. I wanted to get in at 12 p.m. It ended up spiking 5 minutes before from 442 to 442.40. I didn't want to try chasing it, buying at the higher support, even though I was bullish. So I told myself, I'm going to be disciplined and I'm just going to walk away and I'm just going to call it. And then I made it very, very clear. SPY is bullish. It's going to continue to grind and trend up until the 30-minute closes red. This will continue to go up. Avoid puts. If they listened, they did extremely well and they did not get trapped in puts. But it's just having that discipline and understanding that, especially for someone who's being former focused on being bearish, but you guys know I basically have not really been doing puts for the most part for the past 2 weeks. It's just having that understanding that I don't feel as comfortable buying call options this high, right? So I'm either going to sit on the sidelines or I'm just going to wait for some crazy overreaction to the downside where SPY sells off, hits the bottom of a 30-minute wick, and then a nice bullish pattern, right? It's just adjusting too, but it's just like, I'm not extremely excited to be buying calls at these levels, even though it looks very bullish. It's just having that understanding that, I just don't want to buy at such overbought levels, even if the 30-minute pattern and trend is bullish. In some cases, I would rather just sit on the sidelines because the market is open Monday through Friday, man. It's open, there's always another day to trade. There's always going to be another opportunity to put yourself in a much better setup. There's no rush. If you had a couple good winning trades and you're seeing that it's just overbought, but it's still bullish, then just walk away. There's no need to keep on hitting this. That's what you guys need to understand, right? Don't train yourself to do something wrong. If the market ever flips bearish, then you get trapped in it. And it's just understanding how bull and bear markets work as well. In terms of bull markets, calls have been working extremely well at some of the worst levels to buy calls. It literally at the chart, these are terrible levels to be buying calls. But if you use the 30-minute patterns, these were great levels to buy calls today. But it's more than that. You don't want to be buying at extremely overbought levels. You don't want to train yourself to do that, but you do want to train yourself to trade the chart and to trade what you see. If I would have blindly traded yesterday's video, I would have been trapped. But if I waited for a key resistance level, which was 439 or 442, like the video said, and then we know there was a lot of resistance at 444 as well. If I wait for a 30-minute red bearish candlestick, then boom, we're doing well. And it's not going to be at our exact level in our video, but whenever it forms at a key resistance, if it's even higher the better. If it's higher here, then the better. If it's higher here, then the better, right? So it just goes to show you, if you waited for key resistance on 30-minute red, you would have done well on puts. If you waited for the bullish patterns, you would have done well on calls. But if you didn't wait and understand how to visually trade these overall patterns, then you're not doing well. So wait for these 30-minute candlesticks to close. You should be watching 30-minute candlesticks 3 minutes before they close. 9:57 a.m., 10:27 a.m., 10:57 a.m. It's just having that understanding. A new potential trade could be made every single 27 to 30 minutes. But you want to have a nice pattern confirmed. Sometimes the patterns could be take to an hour to form. Sometimes the patterns could take 2 hours to form. But you also want oversold and overbought levels, right? SPY wasn't at an oversold level for calls if you look at the overall macro point of view, so it's not the most attractive. But if it looks bullish, I'm not doing puts, and I might not do calls. I might just sit on the sidelines. Like I said, I had 4 winning trades in a row, so I didn't feel the need to keep on going at it, but I led the overall direction. I made it and told them very, very clear in the chat every single 30 minutes. This is bullish, this is bullish, this is bullish. It's going to continue to go up. It's going to continue to go higher. Do not do puts until the 30-minute closes red. If they would have waited for the 30 minutes to close as red and then they wait for it to go back towards the high of that resistance, they would have made money on puts. So with that being said, I'm going to be wrapping up this lesson here, guys. Thank you so much for watching. If you do want to join Trader Society, it's going to be the first link down below in the description. All of the information is explained down below. You can get started this week investing into your education, watching the video lesson library, and you will also have direct one-on-one messaging access to not just myself, but the moderators and the networking opportunities and the local connections within the chat room. So if you do want to check us out, it's going to be the first link down below in the description. You can get started right now, and you do also get access to the live trading that we do every single day, my real-time analysis, every single real-time trade that I make, the real-time watch list. It is all included, is the first link down below in the description. We had several people who joined the program this week who've made multiple costs of the program back within their first single week. And the polls are speaking for themselves. You can visually see, man, people are getting results, and we are so consistent. This is now, in terms of our green streak, it's been green for over 2 weeks in a row on my overall results, and the polls are speaking for themselves, man. You could see all the green, and there's very little red. So if you do want to be a part of us, it is the first link down below in the description. I will see you guys in our next video on Sunday. I will be in the Discord chat from here for those of you who have any questions.